Hey guys, welcome to another video brought to you by Total Control Traders. If you know others that may benefit from the content we provide, please consider retweeting and sharing our channel. And big thank you goes out to Atomic Bond for retweeting last night's video. A lot more views had came in for that video. So thank you, Atomic Bond. Now remember, last night video, we covered the must hold zones. And as of today, we lost that first one. This is very significant because now we have lost the pandemic trend line, as you can see here. From the low to the bounce to another bounce to the previous loss that was immediately bought up, and now we are losing it for the second time. So I've changed the wedge that we were looking at before. This wedge, the blue line, back to the blue line, because they are of less significance now versus this megaphone pattern that is now in development. You can see multiple supports from here, multiple rejections from the upper trend line. This is the next key to hold. In between that, there's the 0.382, which right now we're seeing a close to double bottom as of right now in the closing of today's market. And now we're in the after hours. Near double bottom at the 0.382, 3888.8. Following that will be the 0.5, which lines up with the previous high, the 1-to-1 extension rejection area, 3855.7. Then at the key area that I'm looking at, around the GP, around that 3820 mark. So this is SPX. Notable bearish action today, starting at 9 o'clock. So we had a decent move in the AM, but unable to break this trend line. You can see a clear rejection from the trend line this morning. Now, triple rejection, trend remains bearish on the hourly as well as the 4 hours. Okay, so let's see, 1, 2. The ascending megaphone also has a possible inner trend line, depending on how you draw it. If you draw it from this low to the wick again, and then using the body, then there's a potential of an inner trend line right here, which will line up with the previous resistance trend line, which also lines up with the GP as well as the key zone. So quad confluence, this is a key to hold, the key to hold. All right, next is we're going to change it up a little bit this time. I'm going to cover Russell first. So US 2000 US dollars. Russell has lost the key zone as of today. You can see previous resistance following support, and now we have lost it. Increasing bear volume. Chart is getting to that oversold territory really fast. We have gone straight from daily bear divergence to near oversold. RSI is at 39 right now on the daily. On the 4 hours, already oversold, and there is a 4-hour bull divergence that has formed now. So would anticipate a bounce on this, especially given what the QQQ and IWM is looking like. The chart is a lot weaker than I anticipated because I was looking for a bounce around this zone, but instead we 4-hour bear flagged and got a confirmation. Now there is a 4-hour bull divergence. If you're in TSLA or Russell 2000 bear play, just be aware of the 4-hour bull divergence. All right, and the next is Dow. The only one that closed green today. Ever so slightly. I think it was at 0.05%. So we're rejecting from this last projection of the 1-to-1 extension target using the low of 29,670 to the high of 32,081 to the higher low of 3543. That projected a 1-to-1 extension at 32,954.8, and we saw a rejection from there. However, chart remains strong on Dow. So what I'm going to do this weekend is we're going to go through the Dow's composite. What exactly makes up the Dows? And I pulled it up already. There is 65 tickers that makes up the Dows. Meaning this weekend is going to be a long video. We're going to be going through all 65 of these on top of the top watches that we normally watch, as well as the requested tickers. We got to find those relative strength charts where they are lying within these 65 tickers. Right. So Dow remaining strong, however, is looking for that daily higher low. Right now, we are still trading over that 0.382 and stalling in the previous 1-to-1 extension target from the Elliott's wave 2 to 3 to 4. 3 right here to 4. Which is interesting because we did not see a rejection from the 1-to-1, but now we're seeing a stall around it. So it's using it as a support instead of a rejection. Kind of interesting. All right, next is NAS. So the good news of the market, aside from all the bear actions, the good news is that we are finally seeing some market synchronization. It is back after a long time of unsynchronized movement. Early today in this morning's morning live, I mentioned that there was noticeable unsynchronized movement in between NAS and SPX. NAS was clearly bearish while SPX was holding up. You can see since 7 o'clock there was a big bearish price action. Regardless whether you're looking at 30-minute or hourly, straight from the open, NAS was dropping versus SPX straight from the open. It started running before a pullback, and then it ran more, bull flag before failing to confirm. So NAS has now broken bear, and if you don't follow my Twitter account, make sure you check it out. You get a little bit more intraday updates versus YouTube. And then, of course, our trading community gets a whole lot more updates than any other ones. So with Twitter, I mentioned as we were breaking down that this now, the inverse head and shoulder pattern that we're looking at on NAS, as well as most of the tickers that we were looking at for potential inverse head and shoulders, has now been negated. Likely been negated. Has been negated. So this was the left shoulder, this is the head, and this was right shoulder. We needed to confirm today. However, we broke down instead after a triple wick on a triple upper wick, similar to the GP rejection, triple upper wick. So now brings us to whether if we're gonna see something like this, a repeat. But the way I'm seeing this, because we have broken down both of these trend lines on the shorter time frame. If you were to look at it 4 hours, this trend line was the main one I was looking at, this upper trend line. We have found support over it multiple times before shooting up, and then bull flag, unable to confirm, breaking down. At the moment that we broke down under this trend line, that was the signal that now bears are in control. The next key support is 12,700, following the key price that I'm looking at is 12,600, right around that GP, which lines up with the 1-to-1 extension. So with the market now a little bit more synchronized going forward, the game plan will be to focus, for me personally, will be to focus on bear plays, vaccine plays, banks, as well as the DAOs. So that's why this weekend we're going to be spending plenty of time going over the DAOs. We need to figure out what tickers are worth playing and what bears actions are going to look like. I'm looking at this as potential ABC pattern on the daily. This was, if you look at this trend line, it never actually made a B. So this trend line confirms that this was an A move, and then the GP rejection is a B. Now we're potentially looking at a C. As to where the C might end up being, let's take a look. So the move since November, we have already came to close to the GP on the last drop. And then the whole move since pandemic. So given this is the case, I don't imagine this to be accurate anymore. Would consider from leg 4 to leg 5. So there is somewhat of a resistance here as well as support here. Not too clear though. Potential price action, that price target that I'm looking at would be down at 11,800. With realistic price target, something that makes a little bit more sense, would be around this 0.382 of the whole move since pandemic at 11,128. That is the 0.382, very closely to this previous rejection and support zone. So keep an eye on NAS. After the break, the bear break of this trend line today, would anticipate further downside. All right. So that's it for the market. Actually, let's do a little bit of a deeper dive on the market today. VIX has spiked, nothing significant. A little bit of a daily bull divergence that's playing out right now, but nothing significant enough to take note of. US 10-year over 2-year, nothing either. US 10 years is breaking bear. No bear divergence, but we are seeing breaking down under the daily 8 yesterday with the follow through today. Yeah, with the follow through today for the first time since January 28th. So that is very noticeable. The last time we broke down was on February 10th. Without follow through, immediately bought back up. Now we're trading, not only are we trading under the increased momentum first trend line, we are also trading under the daily 8 with confirmation today. And last two, but the most important, are US dollars breaking over the key support. Now the next resistance coming up, we will be looking at around this area. Next resistance coming up is 92,824. Probably move this up. Still in play. This one's no longer in play. Following the break of 92,824 will be a lack of resistance all the way up to 93. So US dollars looking bullish. That is bad for the market, bearish for the market. All right, first of the hottest ticker, Bitcoin. We're right on resistance, previous resistance right now. What is this price action? Why is there two? 52,174 is the key support. Previous key resistance. This must hold for bulls, but the chart remains weak. Daily, huge daily bear divergence that is playing out right now. Sell-off has not been as strong as what the bears would like to see. And GP, we are holding right around that 0.5 as well. So there's a chance that we're going to bounce from here. Not extended from that 88 yet. GP 0.3. Let's see what this looks like. Okay, so from the looks of it, this was a key rejection, 42,000. We broke over it and never back tested. There is a high chance that we are going to see a back test sometime in the future. It doesn't have to be near in the future, but I would anticipate a back test of 42,000. Previous noticeable rejection, all-time high rejection. It has to be back tested at one point or another. Aside from that, not noticing any key zones aside from the current price, 52,174. There's a potential that we see some stall around the short-term GP. It does line up with the 0.382 of this most recent run from 28,800 to 61,781. All right, next is Tesla. Remains bearish. We're just about to break that previous higher low, and this inverse head and shoulders has now clearly been negated. Upon the break of this previous higher low, would be looking at GP, which is at 601 to 607. Next is TLRY. So there's news on New York legalizing marijuana today. Would have anticipated a little bit of a bullish action, but instead we saw daily is increasing bear volume, closing near that low of day. After hours so far is a little bit continues to sell off with 0.81 bearish action, 0.81%. Key support coming up, $22. That is a must hold for bulls, but overall the chart still has there's no pattern of inverse head and shoulders, so it's just been chopped. Once this $22 is lost, next support down is 18.23. Wouldn't want to be in this chart right now. Wouldn't want to be in this ticker. Chart looks weak with increasing daily bear volume. Next is PLTR. Oof. All right. Clear bear trend. Very clear bear trend. The lowest close that we have seen since this whole bull run starting November 2020. So the whole bull run started November 1st, And seems like PLTR started a little bit earlier on October 21st instead. And since this whole bull run, we have now given back 51.67%. Noticeable bear price action. Would not be interesting in this ticker. Wait for that curl, the sign of curling, finding a bottom. You would rather be late on this name than early. Right now, it was just a slow sell-off, grinding along that 88, and now the selling pressure has begun to increase, increasing daily bear volume, breaking under the GP, breaking under the trend line. There is no support nearby aside from $20.18. So right around that 20 would be the last support before an actual breakdown. Next is FSR. So the reason why I moved FSR back to top play was the call out of this head and shoulders pattern. Upon the break of this neckline trend line, breaking under, we would see follow through. So we did break under the day after that I called it out. On March 16th, we broke down under the trend line. Following that, we gapped down and then had a little bit of a bounce. But then following that, we gapped down, sold off. Then following that, we gap up, sold off. From there was just straight sell off. Now we're right around that target, in between 1750 to 1770 that I had anticipated. So from here, I would expect a bounce, but the close is extremely weak. So there is a trend line, a key trend line that must hold for bulls. So this is the last key trend line that gives bulls any hope, in the sense that if we don't bounce from here, it's going to be a complete breakdown all the way to the key zone around $14.32 to $15. However, the reason why I think that there is a chance that we don't bounce from here, if you look at it, it is an increasing bear volume on the daily, and we are not yet too far extended from the daily 8. So there is a chance that we continue for the next 2-3 days, continue to sell off before bouncing from this key zone. Do note that if you're looking for a bull play, be quick on your feet, be quick on your trades. Next is Wayfair. So not an ideal close on Wayfair. I was looking for a hold of this trend line from the wedge, the upper trend line, as well as the daily 8. However, daily bear volume looks okay. There's a key rejection from previous key resistance. Daily bear divergence now playing out. Somewhere around there. We did close under the daily 8, slightly decreasing bear volume. Likely another day or two of selling before finding a bottom. Keeping my eyes very close on Wayfair. Monthly bull flag is still intact. And there is another 5 more trading days. We're gonna need, ideally we want to see a close near the high of the month from now till the end of the month. Monthly increasing bull volume, so that's still looking okay. Don't think there will be any bear divergence that's gonna form on the monthly. So longer time frame wise, chart still looks great. Let's see, do I have any? I think aside from that, lately there's been a lack of ticker requests. Now that's a good thing and a bad thing. Good thing is it shows that a lot of people are inactive on trading due to the choppiness of the market. So that is a good thing because people essentially are not getting chopped up from the indecision of the market. But the bad thing is you gotta make sure that you're still doing your homework, getting prepared for that move, whether it's going to be bearish or bullish. Have your thesis ready. Make sure that you have your game plans for both theses ready. Have your tickers ready. Know what tickers you're going to be playing. During the consolidation phase, you want to be looking for relative strength on what tickers are presenting themselves as stronger versus market. As of right now, because the market has just broken bear under key trend lines on both SPX as well as NAS, and with Russell breaking down under the key zone, overall market is looking very weak. So take the time to prepare your game plan, whether that's going to be playing bears or getting prepared for the bull plays. All right, I'm going to leave it off at that today. Don't forget to give a thumbs up. If you're looking for that financial freedom and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. And remember, the best compliment you can give is by spreading the word about our channel and our Twitter. Also, check out our website and Twitter. Website at totalcontrol.com, Twitter at _TCTraders_. We offer a subscription model to our chatting platform where trading ideas are shared, charts are reviewed live, as well as my personal trade callouts with the last accountability check of 90% success rate. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.